Record. Wow. Okay. So I'm going to do goal today. It won't take too long, probably less than a couple of minutes. So which way is gold gonna go? So this is I'll first say where it should not go. It should not get above 1818. This level is kind of important. Okay, we don't want price, we don't want gold to get above. Because if gold gets above 1818, uh especially if it starts to close above and does some correction up here, it does stuff above here, we don't want that. All right, so we're looking for the sells on gold. um so if we sell, and don't put huge lots first, don't put huge lots first until you get a really really good kind of entry. um um but before I talk about entries, I want to talk about, I just felt I had to mention where price should not go, so everyone knows that if you're looking for the sell, okay, it gets up here, I have to start to exit the trade. So think of the defense first, okay? Don't just dollar cost average, just keep selling when price has gone the other way, So we're looking for the sells now. You should not get above 1818, right? Gets above here, do not stay with the sells anymore. So right now we're looking for the sells, okay? Now we're gonna go down to the lower time frame. We're gonna go down to say this is the daily. We're gonna go down to the 4 hour. Um 4 hour. And on the 4 time frame, yeah, we're gonna do some labels on the 4 time frame. Basically, it looks like hold on there. 4, let's go chow. Let's go 4. Let's go to 4 time frame. So basically what we have is something like that. Okay, easy. Well, this is what you have. Nice and easy. Uh so this is like the first wave, this is the second wave, third wave. Now you are in the fourth wave and fifth wave. Okay, you can see the waves. Okay, great. So what do we do now? We say we're looking for the sell. So do we just sell it? Well, I don't. Okay, so you see there are different conviction levels of sells, like poker, right? If you think that you can win, we go all in. So the beautiful thing about Forex is we just wait till we get royal flush or we get straight. We have a high conviction trade before we even put our money at risk. That's the beautiful thing about Forex trading, right? We don't risk anything until we feel that we can win. So I don't think this is the main move down for now. I don't know what is the main move down for now. There was one trade actually on a much lower time frame. I can talk about that, which is actually over here. Not difficult to see. It's just this ABC, WXY, and ugly 4, and one more down. So this was a trade that you were looking for. There was a nice time factor right here for this move. This is a 10 standard lot trade, basically, because of a huge time factor. So this is a trade setup. So now that that's over, what we are more concerned with is actually this big move down. This big move is also a 10 standard lot trade, and this is gold. So that's a lot of money, all right? It's a lot of money, all right? But what would make a good trade to the downside? All right, a high probability one. Well, first is you want this to come down somewhere around here, right? You want this to come down and you want this to actually go back up one more time. But Sherman said it should not go above here. That's true. What you want is you want price to actually go up and wick back down very strong. Come back down and do and come back to this shoulder basically, and then it pulls back. See, then when it has this kind of the very famous head and shoulder pattern like this is the best kind of trade to the downside. Okay, and how do you actually see all these moves? Because it's kind of confusing. Like, well, basically, what you're looking for, I'm breaking it down is, if you look at this, right, you see that this is a 1, 2, 3. Uh, Here, you see that? Yeah. So what are you missing here? What are you missing there? You see, the pieces are missing. So if you sell this, if we sell this, like, oh yeah, I see an impulse. uh, So basically, people trade impulse correction, impulse, right? It's not so simple. Impulse correction, impulse, let's go. No, not maybe, but as I said, if you try to do, if a person just has that impulse correction, impulse, uh, not really understanding the big picture, then a lot of things go wrong, because not all impulses are of the same um of the same power, basically. So basically, if this one goes up here and then it comes back down like this here, you see this look like an impulse. You see, this looks like an impulse correction impulse, but then it doesn't last long, right? However, when if this one does an impulse correction impulse, this thing here is the bigger picture. This thing here is just like a liquidity surge. People who are in the early sales knock them out. But what is really very important is actually um, where is the font? I just gotta. Okay, sorry. Let me look at the tools. Yeah, line with. So this is the bigger picture. This one here, you see, this is just a liquidity search. This is the big one that we are looking for actually. Okay? So knowing that this is the bigger picture is very important. It's a bigger move is important, right? And also knowing that taking this sell is potentially tricky, right? Because you could get stopped out, right? So basically, you want this to go back up, and you want it to be rejected and to come back down. Or in other words, on a higher time frame, like a daily, weekly, you see it just week back down. But then, on from a wave perspective, you're looking actually for this impulse correction, impulse to the downside. So that's it. And of course, so basically from a zone from a like a daily candle, you're basically looking for this one to go back up. See this is a daily. You see all these weeks, all these candles over here. Yeah. See how it comes here and it push back up. Well, what you want is the opposite. You want a candle to go up and push. We want the candle to go here, from here go back up and then push back down. That's key, right? That's key. Push back down. So you want it to come back below, and then after you want to, you see impulse correction, impulse correction, impulse. So you go back down to a lower time frame, and then you get a 1, 2, 3, which is 1, 2, 3 of the same rank. And then once you get that, once you get 1, 2, 3, you're gonna have your shoulder right there. Here, your shoulder right here. So then 2, 3, 1, 2, and of course the third 1, 2, boom, 3. Then you're looking to take off profit here, and then see where the rest runs. This could potentially collapse. Basically. Go. I think if you check some of the previous charts back in December, gold was going to collapse, right? Even though, there's a crisis going on between Ukraine and Russia, makes you feel like, oh, you know, investors put their money in gold, but hey, look, it dived. So, right, that's what is more important is time factor. Time, as a retail trader, as a trader staring at a chart, with no connections to Putin or powerful people in the world, the only ally is time. Time will tell you who is going to win. And you see, oh, looks like this guy is winning. Okay, let's just join him. That's it. Just wait. You wait, you know which army is going to win. Is the bear army going to win, or the bull army going to win? Then when you see, oh, it looks like the bull army is going to win. Okay, let's jump in, guys. That's it. So allow time to be your ally. Yeah, okay. So powerful friend. Powerful friend. That's it. Not too difficult. Usually you can probably do this in about 5 minutes and then just well, of course I have to explain a little bit more in detail uh, how a high probability trade sets up. Okay, so I'm just going to remove all this, because I already know what I'm looking for. So I just remove everything like this. So what am I looking for? Looking for it to boom up. I'm looking for boom down. I'm looking for correction. All right, but this one to me is the bigger move. And if price somehow pops up like that, this I don't want to see. I don't want to see that. So I know what in my mind I don't want to see. Okay, basically. Now, what you see? What if it's okay for price to go up and come back down? But what price cannot do is it cannot go up here and then stay here. It cannot do that. All right. If it goes up and comes back down, it's just a liquidity search. It's just a stop people who are in the cells, stop them up and come back down. But if price goes up here and stays up here, that is different. Okay, that's something else. Okay, so let's be very clear on that. There is a difference. All right, price stays here is no good. Price that goes up and comes back down quickly, it's good. Price goes up here, stays up here, it's bad, right? Because I'm looking for the sell. If price goes up here and then starts to show bullishness upside, that means it's probably going to go upside. But right now, it looks like a sell. All right. So that's gold. That's gold. All right. Some of the, I also very briefly talk about some of the last trade that I did it on my iPhone, and as you can see, I was talking about the Euro Ors, right? It was up here. Just go and check, see how far it fell. So you can go check it. I think it was the last video just before this where I was talking about the sells up here, and so that's how you get 1,000 pip trade, basically. See, it's almost like 900 pips. So it's almost 1,000 pip trade. So here, the bottom, you take some off already, right? And the concept actually is really quite similar. It's basically, I think I have it. I think I have it. I think it was here. Hold on. Stay on page. Hold on. Let me just. I think it was yeah, this one over here. So I posted on TradingView, and then I also recorded it very quickly on my iPhone. I posted it on YouTube as well. So basically, you're looking for the sell. So what's very interesting here, it's going to be a lot like gold. Basically, if you get in too early, there will be a liquidity hunt. You see how it comes down? You think this is going to go, but one more up to lock people out of the market, and then you see what happens. It wicks back down. This is perfect. This is what I'm trying to say about gold. If it goes up here and then it wicks back down, any kind of entry that you see like here impulse. You see this correction. This is the daily chart, but on a low time frame, you can see an impulse correction, impulse on a break itself. Okay, so if you can get it up here, that's the best. Because I know all this is a little bit messy, but so if you get it at a good entry, you can just, here, you take some off, you see, let the rest go, see how far it goes. But basically, it's all free money after that. It's a lot of money. It's a lot of money. Okay, don't look. This is Euros daily. They move in the thousands of, like 500, 800, 1,000 pips, like just like that, right? So that was Euros, and so we come back to gold. Basically, it's the same thing. So whenever I spoke about Euros, about this, able to go up, take out the early sells, stop them out here, then come back down. Any correction here, you can sell this, and then basically you put your stop up here because you don't want price to get up there. It can't be any more clear than this, man. I mean, this is like giving away free money already. Right? If anybody makes money, um, I'll be very happy. All right. So, all right, let's go. And also a quick recap on the last Euro Aus 1,000 pip move. So thank you for watching, and bye bye. Bye. Bye bye.